welcome, welcome. I'm really excited about tonight. Tonight, we're going to be talking about how to invest in real estate using your retirement account. This is something that I personally do, and I'm excited about others learning how to do it as well. If you don't know me, I'm Tiffany Spann. I'm the co-founder and partner here at Crown Capital. My partner, Noel Parnell, is actually doing due diligence on a property we may be going under contract with. So he's not able to join us this evening. And I think I actually saw him join by phone, but I know that he just left the property. We were just communicating. My partner, Jared here, he's on the call, but he's actually under the weather. So unfortunately, he's not going to be able to speak this evening. However, my last partner, Lupe Chow, she's actually on this evening. Lupe, I'll go ahead and pass it over to you.
Hey, good evening, everybody, and thank you all for coming. This is a topic, as you can tell, we are very passionate about, because a lot of times we talk to people about investing in real estate and people don't think they have the fund or they have the access to fund to invest. But a lot of times, the retirement account is an option. So we just want to share that option with you. If it's a good fit, that's just money to invest. So hopefully you can find this presentation useful. I am going to introduce our speaker tonight, Matthew Duffy. He is a business development associate at Directed IRA. Directed IRA is the company I used to set up my personal self-directed account. I have been very happy with the company, and they also do a lot of education. There's a podcast. Matt will talk more about it, but there is a lot of resources this company provides. So we also want to show you that and to show you how you can access more resources to get more educated on this topic. So Matt is responsible for maintaining and onboarding strategic relationships with real estate investors, syndicators, and investment partners. He also assists with investors to set up their self-directed accounts for alternative investment. He has a Bachelor of Science in Mechanical Engineering from University of Alabama. And he loves spending time with his family, traveling, kayaking, golfing, and attending live sports events. So with that, welcome, Matt, and thank you. And I'll turn over to you. And we look forward to your presentation.
Awesome. Thank you for that introduction, Lupe. Again, thanks, Crown Capital, for having me on, talking a little bit more about self-directing in your IRA, using those retirement funds, putting them to work inside of real estate, which most of you guys are familiar with, and it's kind of putting your money towards what you know and taking control of your retirement that way. So let me pull up the slides here. Find them. Let's see. Is it coming through?
It is a black screen.
Oh, wonderful. Let me get some tabs here. It's just working. Seems my laptop decided not to work. Luke, do you have the slides still, Lupe? And if you want to share from there, I guess my computer decided not to present them for whatever reason.
Okay. Can everybody see this?
Yes.
Okay, cool. Let me put.
Can you put it in the run mode?
First. Is it better?
Okay, thank you.
Oh, wonderful. Yeah. So yeah, again, my name is Matt Duffy. I'm with Directed IRA, talking about the self-directed IRAs, invest in real estate. Just a disclaimer, all of this is, just for educational purposes. Before you embark on any, investment ventures, be sure to consult with your CPA, financial professional, or other. But yeah, let's just get right into it. So yeah, a little about me. Lupe did a great job introducing me, but yeah, essentially, why are we here? So essentially why we're talking about retirement accounts. If you go to the next slide, the retirement industry, currently there's about $33 trillion located inside of retirement accounts. Kind of dropped off, but a lot of that has been in the stock market over the past year, been, a bit of a bumpy year for the market, but, a growing amount of that is going into self-directed IRAs as that's, becoming more of a popular option for investors. If you want to go to the next slide, Lupe. Yeah. And one of the best things about these retirement plans, you can invest your money into assets that you know. So rather than trusting your financial advisor or trusting a pundit to tell you what index funds to go to, you can go to assets whether that be real estate, if you know of a private company, even people do crypto, precious metals, essentially any investment you can think of, you can do inside your self-directed IRA. One of the nice things too, basically when you're looking at this, there's a few routes you can go. If you're doing an investment personally, that's taxed now, right? That's all going to be put on your personal income. You'll get taxed now for it, which is fine. Some people do that. Inside the IRAs, you have tax deferred or tax-free growth. And so, a traditional IRA, you'll get that tax deferred status, but the Roth IRA is one of the more powerful accounts. Essentially, everything you put into it, it's getting taxed now. So if you start with some contributions, $6,000 per year, as that grows over time, all of those gains are going to be tax-free inside that account. So it's a really powerful tool to grow, your retirement. And once you hit 59 and a half, you're ready to retire, go to Cabo, taking all of that out tax-free. And again, earlier you saw, that 33 trillion in accounts. A lot of people, most of their savings are located inside their retirement. So, if you ask someone on the street, do you have more money in your 401k or your savings account to go buy a property? Most people probably answer their retirement account. So if you're looking to do an investment, you don't have that funds personally, this is a great way to start that off, get your money working for you, and use that nest egg that you've already built up over the years to go ahead and do these alternative investments like you're working with Crown Capital. Number 4, people love to talk about this. I'm sure you've heard of, Mitt Romney having a several $100 million Roth IRA. Peter Thiel, he has a $5 billion Roth IRA. So, at that point, that's just kind of, funny money, all tax-free, but, it's really powerful. All that 1 million, again, it's going to be completely tax-free. You can take that out once you hit retirement and then, use that money for whatever needs you want. So the Roth IRAs, a lot of people are using them. They're becoming more popular. It's a pretty powerful account type. So what's the difference between a self-directed IRA and an IRA you would get, at Fidelity or TDA or any other one of those custodians? Essentially an IRA, we all, know them. You're allowed to do investments. Biggest thing is that it's your custodian is who allows you to do those different investment types. So places like Fidelity, TDA, and Charles Schwab, they're brokers by trade. So that's how they make their money, is selling those, traditional assets, stocks, bonds, mutual funds, which is great. If you want to do that, that's awesome. But if you want to do stuff that all of you are invested in real estate, obviously. So if you wanted to put your money for your retirement to where you want to know, you have to go to a specialized custodian like directed IRA. And essentially the IRS deems any investment allowed by law, except for a few, but the list of what you can invest in is way more than what you can. So any investment, private companies, real estate, LLCs, you can do private lending with that money, crypto, precious metals. I know one of our executives, he purchases cattle in his IRA. So he sells livestock through his IRA, makes money that way. There's one gentleman, I don't know where he's residing now, but he did buy an entire town inside of his IRA. So in terms of real estate, whatever you can think of, you could probably buy it inside your IRA. So basically the possibilities are endless. Whatever deal you're looking to do, more likely than not, you'll be able to do it inside that self-directed IRA. Give yourself full control over it. Give yourself the confidence that you're investing in something that you're directly dealing with. You're not leaving it up to the market for that. And so the account types that you can self-direct. So we offer all of the following account types, your Roth IRAs, traditional IRAs, SEP IRAs. We also offer solo 401k plans. So if any of you are self-employed and the only full-time employees are yourself and a spouse in that business, even if you still have a W-2 job on the side, you are able to do those solo Ks. But these are all the account types that you can invest with. It's not just limited to IRAs. I know health savings accounts, if you have a high deductible health plan, that's also a great option because you get the tax deferred treatment on it, along with tax-free withdrawals on qualified medical expenses. But again, All these qualified account types we service at directed IRA. So if you have any, stores of money in any of these accounts, you want to put it towards real estate, you have the ability to do that and the freedom to put that towards, the investments that you want to do. And so just a little bit more about directed IRA. We are a licensed and regulated trust company. So there are other custodians out there. They are third-party administrators. So they are not directly licensed as a trust company. They use another one. But essentially, we go through audits every year. We report to the Arizona Department of Financial Institutions. So we make sure that we're running everything by the books, doing our own independent audits. We were also founded by 2 tax attorneys, Matt Sorensen and Mark Kohler. So, we have a credentialed team helping us guide us along the way, making sure everything's correct to make sure retirement accounts aren't, put at risk. Everything's good so that once you retire, you can have, clarity that your funds will go where you want them to. And so biggest thing about directed IRA, I'll let you read everything there. But the biggest thing is that we want to be the company that we would refer our friends and family to. So we strive, to have, the best customer service we possibly can. All of our employees self-direct our retirements through our company as well. So yeah, we just want to make sure all of our customers have the best experience possible. We let you handle the investment side. And as a custodian, we take care of the self-directed, help guide you through that process to opening, funding, and investing your account to help you achieve your retirement goals. And so again, this is kind of the short list of what you can invest into, kind of at a broad level. But looking at all the offerings here, you have Bitcoin and crypto. That kind of falls under real estate now. A lot of real estate deals are getting tokenized, putting under that route. Obviously, you see real estate there. Promissory notes and lending. That's another great avenue for people. If you have a smaller balance account, some people get started a little bit later on their retirement. That's totally fine. You can do hard money lending, so you can lend, on rehabs of homes. You can lend to people that are funding deals. Allows you to do some more with that lower balances accounts. And then towards the bottom there, private funds and offerings. That's more alongside what Crown, Capital's offering. Those syndications where, again, you might not have the money to buy that real estate up front, but you still want to get, a piece of the action. So you're able to invest in those, receive shares, as a shareholder of that private fund. And then at the bottom, there's a checkbook IRA LLC, a little bit more of an advanced strategy, but that allows you more control over the real estate. And you can do all of those investment types inside that offering as well. Just gives you another degree of control. So again, what you can invest in, it really is up to you. Whatever you can think of, we can definitely accommodate it, with to a certain degree, but a lot of offerings there in terms of what you can invest in. And so again, why would a real estate investor want to use this? One, again, that's where your money's at. Your 401k, if you've been working a W-2 job for a few years, you leave that job, you roll it over. Anytime you roll over a 401k from an old employer, those funds become unlocked and you're able to move that into an IRA, whether it's traditional or Roth dollars, depending on what you contributed. You can move that to an IRA, and at the self-directed, you have the ability to move that into, a real estate fund. That next part there, you're probably more familiar with the real estate market. I'm sure a few of you are looking at properties. I know it sounds like the Crown Capital team is already looking at some, but you're surveying properties, you're looking at that market. You're not really following the stock market. If you can tell me a mutual fund you actually want to own, that would be great. I'm always open to suggestions, but at the end of the day, you guys are here for real estate. That's what you know and trust. And historically, the real estate market does have better returns than the stock market. So just over time, more people see more gains inside that industry. And again, probably, one of the nice cherry on tops for this is that you can get it tax-free or tax deferred. If you're going inside that Roth IRA, getting it started there, or doing conversion from another account type, you can go ahead, put that all in, you retire at 59.5, all of those gains inside the Roth are going to come back tax-free. So one, you're getting a lot of capital to do an investment if you didn't have that capital before. Two, you're more familiar with that. So you're more trusting. Then third, you're going to get that all tax-free if you do it inside a Roth IRA. So a lot of power inside those accounts, like I was saying. So back to what the IRA can. So you can do rentals, whether it be single family, multifamily, duplexes, things like that. Commercial or even retail properties can be owned inside the IRA. If you can't buy those rentals or properties directly, partnerships, syndications, private offerings, those give you a lot of flexibility. You can go in, with accredited individuals so that you can do the deals. They've done the due diligence. You review it, go in that, make the returns that they're making as well. Also, you can combine your family and friends retirement accounts. So if you and your spouse, you have 2 retirement accounts that are kind of just sitting there, you can pool your funds together, or if you have friends, business partners, anything like that, you can accumulate those funds together and do it into larger properties so that you can, go ahead and purchase that property. And again, basically any property type you can think of. So raw land, mineral rights, water rights, you can purchase tax liens on properties, do rehabs. Again, possibilities are, almost endless inside the IRA. What you can think of, you can probably do. One of the exemptions to what you can buy would be personal residence or property. So that would be, I bought a home personally as an investment property, and I'm renting out to tenants. I want my IRA to purchase it. I can't purchase for myself directly. That'd be a prohibited transaction. Or if I wanted inside my IRA, I want to buy a vacation home, in Hawaii. I want to rent it out for part of the year, and then I want to, use it the other part. Won't be able to do that. This will strictly be investment. You won't have any involvement with it. But again, that's really the only limitation on the property is ones that you own or plan on using. And so this is the basic process of how you get invested. So an important distinction to make when you're doing an IRA is that you and your IRA are separate entities. So as the IRA owner, you can establish a self-directed IRA. But whenever you do an investment, it's important to know that it won't be, Matthew Duffy is not purchasing this house. It'll be something along the lines of directed trust company, FBO, Matthew Duffy's IRA is going to be the holder on that investment, whether it's a property, private fund as a shareholder. But yeah, as the individual, you'll do a contribution. You can either do that directly from your personal account, you can do a rollover from an old 401k plan, or you can transfer funds directly from an existing IRA. And that'll all go into your self-directed IRA. Once it's there at the custodian, from there, you direct us to purchase the property. So we will sign all the documents on behalf of that account. So if I'm purchasing, a single family home on 123 Drury Lane, all the closing documents will go to the custodian. They'll sign on behalf of the IRA to purchase it. If you have to do any expense payments, I like to use the example of air conditioning because I live in Arizona and that's a pretty important thing. But anytime you're doing any expenses on the property, doing any rehab, any repairs, that will all come from the IRA. Again, you're not doing it, your IRA is going to take care of that. And so next piece, you have the property secured. You're starting to cash those rent checks every month. That tenant pay goes directly to your IRA. And so you have the option of keeping it in there, reinvesting it, purchasing more property with it. Let's say, you reach 59 and a half, you're ready to retire and you sell the property. So all of the sales from that profit or all the profits from that sale go back to your IRA. And then once you're of that age, 59 and a half years old is kind of the golden number for the retirement accounts. That's when you can start taking the distributions. So that will come directly out of the account from the custodian. We'll issue payments to you directly, and then you'll be able to use that for your retirement at that point. And so again, just kind of highlighting this a little bit more, but again, up there says the contract to buy, it's going to be in the name of the IRA. So directed trust company, FBO Matt Duffy's IRA, all that comes directly from the IRA itself. IRA is going to be the sole owner on it. They're going to get all the income. They're going to pay all the expenses. Again, you won't be able to do any work on the property, won't be able to collect that money personally. It's all going to go to the benefit of the IRA. And so there's a couple options to do that. One, you can purchase that directly through the plan. So that's what I was talking about there. The property is directly on the deed. The IRA is directly on the deed. IRA is receiving all the profits. There is another way of doing it where you have an IRA LLC. Like I said, a bit of a more advanced one, but instead of the IRA owning it, an LLC owned by the IRA owns it, and it gets all of the income, all that. But at the end of the day, it'll still come back to the self-directed plan before it comes back to you, and it'll all still be inside that bubble for you to grow your retirement and make those purchases and investments through there. And so I'll touch on this briefly, but like I said, the rules on what you can invest in, pretty short list. Biggest one would be collectibles. So art, stamps, wine. Our CEO always says wine collections slowly turn into bottle collections. So not gonna be able to purchase that in the IRA. Life insurance and S corporation stock. Biggest one with the self-directed, I was mentioning that earlier with the personal property. You can't transact with disqualified persons. So that would be you as an individual and direct family members. So that would be anyone along, the lineal line, parents, grandparents, children, grandchildren, and spouses would all be prohibited as well. And so again, just outlining that basically anyone directly up and down that line, it's going to be a no-go on the account. But distant family, brothers, sisters, aunts, uncles, all good. Also, you can transact with your father and mother-in-law. So IRS doesn't think that they'll give you a sweetheart deal. So you're able to do an investment with them as well. And again, the common and prohibited transactions, renting to certain relatives, personally repairing the home, or paying for repairs with personal funds. Those would all put the IRA at risk of being distributed. So you want to avoid those as much as possible. You're always going to do it either directly through the custodian itself, or if you have an LLC handling those transactions, they'll handle all those directly. So nothing's coming back to you personally. It's all inside the IRA. Again, still separate entities, but all those mistakes are avoided. You're going to go ahead, be vacationing in Cabo before you know it. And so this is about the checkbook control structure, but there's also a good graphic to talk about how to invest into a syndication. So I know Crown Capital is offering this, but essentially, if you just replace IRA LLC underneath that with private fund or syndication, it's going to work basically the same, and the investment will change. But essentially, the self-directed IRA, instead of that buying that rental property directly, I'm going into a fund now. And so a company like Crown Capital, I send my funds there. I sign a subscription agreement and do a private fund or a PPM for that. They take all my funds, they handle all the purchasing of the property, receiving the rent, paying the expenses. At the end of it, they'll either pay you out distributions on a certain basis, reinvest it. But once that investment is done, all of those proceeds and the sale of those shares will go back to your self-directed IRA account, and then that goes back out to you. So instead of you purchasing that property directly, they're going to handle all the nitty-gritty of that. And again, if it's a larger property, you're looking at a multi-million-dollar multifamily deal, it allows you to get in on that without having to take out any loans if your IRA account's too small. Allows you that flexibility to go into larger projects, make better returns, all safely inside of that IRA structure. And so one of the most powerful account types, especially if you're self-employed, would be that solo 401k. So it works similar to one at your employer, but in this case, the employer and the employee, they're pretty interlinked. So basic setup for the solo 401k, as long as you're self-employed, only full-time employees, yourself and a spouse, you adopt a solo 401k plan. And so you can do that with KKOS lawyers. We work with them to establish a directed IRA. But you establish, a solo 401k or individual 401k plan. And the nice thing about these is that they allow you larger contributions than the IRAs. IRAs are $6,000 if you're under the age of 50, and then you add an extra grand, so $7,000 if you're over the age of 50 as a catch-up. But those are, per year, pretty small amount to contribute to over time. The solo 401k, as an individual, as long as you report earnings of at least $20,500, you can max out your contribution to that plan. And as the employee, you can do that contribution in either Roth or traditional dollars. So essentially, if you're able to do it, you can start a Roth 401k account and put $20,000 in, basically out the gate, which is, about triple amount what you could do normally inside of an IRA. Another, key piece of this is the employer contributions. So it's be coming directly from the business, and it'll be 25% or 20% of your compensation is the maximum, up to a maximum of $40,000. So that would be through profit sharing or salary deferral. All those will be traditional, but it does allow the business to make additional contributions, grow that account even more, that you're still fully able to self-direct and you're directing those funds completely. And also, if you're doing the traditional, businesses are able to write out those deductions. So you might be able to get a tax benefit. Your CPA will be able to tell you, what would be, ideal for your situation. But essentially, solo 401k plan, it's going to work pretty similar to the IRA. It's called a solo 401k, but it's still going to be under the name, completely separate from the individual. You're also able to fund it from old 401k rollovers, so you can increase that account, even more that way. But the investment process will be, almost exactly the same. Solo 401k plan is going to purchase into the property or investment. All of those gains, expenses, all that will go directly to the plan. But at the end of the day, the plan is receiving the benefit. You get rent payments, payouts from sales, and that's all, increasing your retirement even more. So again, just kind of hitting the qualifications for this. So self-employed, no employees besides yourself and a spouse. You have to have earned income to do it as well. So you have to be offering good or service. I know some individuals have, LLCs where they're just cashing rental income each month. If it's passive income in that category, it's not going to count. So as long as you're doing, some form of good or service provided, earning ordinary income, you'll be able to qualify. And again, you'll have to get documents and administration for that account, either a directed IRA or with another party. Just going over the contributions again. The employee, you have $20,500 for 2022. If you're over the age of 50, you get a $6,500 bump. So you can do up to $27,000 if you meet those criteria. And that can all be in Roth dollars. So all that after tax, tax-free growth inside of that account. And the employer, depending on how it's structured, up to $40,000, that'd be the maximum. And again, through matching, safe harbor profit sharing. But looking down there below, your maximum contribution, if you're under 50, if you're maxing out your income each year in that business, you do up to $61,000 or up to $67,000. So again, some people kind of late starters on their retirement, that's totally fine. If you're self-employed, you're able to get that up and running, a lot quicker, build that account faster over time, rather than trying to do it into a, IRA, build it up a little bit slower.
And Matt, we have some questions. Do you want to take them now or at the end?
I can hit a few of them now if that's okay with you.
Okay, let's see. The first question I see here from Ash. His question is, can one move the fund in the fidelity with your past employer's 401k account to a directed IRA?
Yes. So once you sever employment, so essentially with the 401ks, once you either sever employment or you reach 59 and a half, those funds become unlocked. So definitely from a previous employer, those can be rolled over. That would be a direct rollover. So they would send the funds directly from Fidelity to, directed IRA. And there wouldn't be any taxable, consequences for that. It's just moving from custodian to custodian. But you definitely can do that. That's a pretty common route of people funding their accounts, just kind of having those old 401ks. Sometimes after you leave a company, they do want it, moved out sooner rather than later. So, we kind of deal with all that. But to answer that, yes, any past employer 401k you're no longer associated with can be moved to an account without issue.
Okay, and Carolyn asked, how is the money taken from SD payback? What kind of terms and or can you take without paying back terms? I'm not, do you understand that? Or Carolyn, you can unmute yourself if you want to just ask the question. What is SD?
Self-directed IRA.
How is the money taken from self-directed paid back?
I think Matt already, he already answered it because I was thinking of it more like a traditional 401k where sometimes you can borrow money and pay it back, at a certain interest rate or that type of thing. But he kind of explained that, you're taking it for an investment. It's not really personal. It's, like you said, in a self-directed IRA is kind of the holder of it.
Yeah. So to speak on that though, the solo 401k, that's going to act like your, traditional 401k plan where you can take a participant loan. I believe the cap is, I believe it's either $50,000 or half of, what your income is, whichever the lower of that limit is. But inside the 401k, you can do a participant loan. It'll be essentially the same terms you're seeing inside your traditional plan. So that would be the exception, that 401k. But inside an IRA, you can't do a participant loan. Again, all that's going to be inside of it. But the solo 401k, that's another benefit of it. It does allow you to do a participant loan, and then you would have those terms, pay it back over time.
Great, thank you.
And Jerry has a question. What is the difference between the solo 401k and the EQRP?
Yeah, so essentially an EQRP is just kind of a rebranding of a solo K. They're both, essentially the same plan. It's an individual sole employed employer plan. So I know at EQRP, they do say some stuff about how, it has more, higher limits than a solo 401k. That's not always correct. Essentially, they say you can do it without being self-employed. You still do have to be self-employed, still be making, that income through your own business. But at the end of the day, it's pretty similar, as I understand it. So basically solo K, EQRP, individual 401k plan, those are pretty interchangeable terms. But EQRP is, I know that company is a little bit different in how they kind of operate.
So for the people who are not familiar with EQRP, so EQRP is essentially the name of the company. You can Google it. It's just a different fund custodian, and they provide similar service. So feel free to check it out. And Ryan asked, okay, so what about if you are still active with the employer? Can you do the solo 401k or self-directed if you are active with that employer?
So if you're still active with the plan, the existing funds in there, not really easy to move. Essentially, you'd have to check with your current custodian. Each plan has its own plan documents. So in there, it'll outline in-service rollovers. That's kind of the key term if you want to move money from an active plan to a new plan or to another IRA. So typically, they don't allow in-service rollovers if you're under 59.5. If they do, it's usually a portion, about 15K or a certain percentage of the account you're able to move. But if you do have a 401k at your W-2, you still are able to do a solo 401k. So as long as you have that business where you're self-employed, you still can establish a solo 401k. Your employee, so your individual contributions, I believe still are, across the board to all your 401ks, but the employer can still put funds into that if you're self-employed. So to answer that, you can establish it if you're still employed. Moving, it's going to be a conversation you need to have with your custodian first to make sure you're eligible for an in-service rollover.
All right, Matt. So I'm going back to the slide to finish this up, and we can do the rest of the questions. There you go.
Yeah, and so this one, essentially, there are, I know I've been mentioning, tax-free, tax-deferred. There are certain types of, profits you make inside the account that are taxable. It's pretty, specific situations. Usually when you're going to investment, you'd be aware of it. But essentially the next slide will kind of show what is exempt from the UBIT. So exemptions to UBIT. So this is all the non-taxable income inside that IRA. First one would be interest income. So if you did a hard money loan outside of your IRA, so you're the lender in this scenario, all of those interest payments back out, that's going to be exempt underneath UBIT. So no taxes on it. It's all completely kosher. Same thing from rental income. So I was mentioning, that passive income versus operating income, that's kind of where UBIT comes into play. So if you're making any of these are considered passive income. So rental income would fall under that. So if you're renting out a property, just to a tenant, that income's coming back, totally fine. That would be if you're owning the property outright. There are some exceptions where if you're leasing, equipment that generates operating income, but for the most part, dealing with real estate and, most people's transactions, that rental income is going to be exempt from that. That falls under capital gains as well. Easiest way to think of that is, your stocks. If you sell your stocks side of account, you're making capital gains. That's going to fall under it. Same thing with other types of transactions. So I'm selling a property, selling shares in a private company, selling cryptocurrency. All those capital gains would be deferred as well. And then the last piece is dividend income. So you're a direct owner inside of a fund or a private company. Every dividend income you get, sometimes it's distributed monthly or quarterly, that's also going to fall underneath the exemptions. And so essentially all these incomes are fine inside the IRA, not going to see any additional tax on it. And so, yeah, I'll just kind of go through this pretty quickly, but essentially there's 3 steps to opening up a self-directed IRA. First, you have to open the account. So with directed IRA for the webinar and the participants here, we're offering Crown Capital 150. So if you open up an account by Saturday, we'll be waiving $150 off your essentially setup fees. So instead of paying $345, you'd pay $195 first year, in total. You can also add interested parties. So if you open up an account, but your spouse is the one who handles, more of the financials, they can be added onto that account and they can, ask questions about the funding, get information on the account to kind of run it more, while still having it be under your name. And then this is just a look what you'll see on the website if you go to open up an account, outlines those 3 steps again there. Again, pretty as much simple as 1, 2, 3. You open up the account, you fund the account, and then you invest it. And so, we're there along the way. So if you do have additional questions, feel free to schedule with myself or one of our associates. They can walk you through those steps. The biggest part would probably be funding the account is what we assist with the most, helping you figure out how to move funds from those qualified plans. But yeah, that's basically the, gist of how to get the account up and running. Pretty straightforward. And then again, this is just a look at our online portal to open up your account. Can be done totally online, pretty quick, takes about 5 to 10 minutes. So yeah, that's what you'll see when you get started. You'll go through, fill it out, e-sign it, all pretty simple. I think this is going to be a little bit more pertinent for you guys, essentially funding your account. So there's a few ways you can fund the account. One's new contributions. That's pretty straightforward. That's the individual sending money personally, and you have a certain limit each year depending on the account type. The other 2 that are kind of more common is going to be transfers versus rollovers. So a transfer is going to be moving it from an existing IRA. So that's moving it from one IRA to another IRA. And how that's initiated is you submit a form to us. It's called a transfer request form, and we initiate that directly with the other custodian. So we'll review the form, sign off on it, send it directly to them, and they send the funds directly to us. Again, not going to be a taxable event moving between custodians. It'd be a direct, trustee to trustee transfer. The other option, the rollovers, that'll be moving from an old employer plan, whether that's a 401k. I did see a question about TSPs as well. Also 403bs if you're a teacher, and other plans, along those lines. Typically, those will be done as direct rollovers. So with those, you initiate it. So you opened up your account, you have your account number. You then go to your custodian. You let them know, I want to roll over my funds to directed trust company. We'll provide you our wire, check, or ACH instructions, and they cut those funds directly to us. So it's not leaving the hands of custodian. It's not going to be a taxable event. There also are indirect rollovers. Those are less common, but essentially if the money gets distributed to you first, there is still a way to get that in the account without paying the penalty on it. So, it is still allowed, just a few restrictions on that. But again, the timeframes are, this part is kind of the one that we can't control as a custodian, just because there is another input. We're waiting on the funds to be sent from another institution. So the timeframes, typically about 1 to 2 weeks, depending on your custodian. I always tell clients, whenever you're ready to do it, once we submit that transfer request, follow up with them. They'll have all the info on the status, when they're sending it out, if anything else needs for it to be processed, because you're still in control of that. It is still a self-directed IRA. Essentially, directed IRA is your ship of your retirement, and you're the captain. So you're directing us where to go, and we'll assist you on the way. But definitely, check up with the custodians. They'll be able to tell you, that timeline, when to expect it, how it's coming, all that good stuff. And again, you'll see all these forms, like I was mentioned, transfer from existing IRA, roll over from a 401k, make a contribution. And so typically you'll do a cash transfer. That's just moving money, that's sitting in cash from a money market account. And then the 401k or other employer plan, you'll send a form to us, essentially a deposit slip, letting us know where the money's coming from, but then you'll reach out to them directly, get that initiated. And then the contribution, we partner with Plaid on that. It's a pretty simple process to do a contribution into your account. Pretty straightforward on that as well. And then invest the account. This is kind of what everybody does the IRAs for. So essentially, wait till your account is funded. So we receive the funds from the custodian. They've cleared, posted the account. Depending on your investment type, you'll complete a direction of investment form. So if you're doing real estate directly, there's a form for that. If you're doing a PPM, slightly different form, but essentially it's going to outline what your investment is, how much money you're doing it for. If there's terms applied to that as well, it's listed. And then a couple signatures as well as wiring instructions. You also provide any required supporting documents. So if you've purchased real estate before, you have all those fund closing documents to sign. We take care of signing those for you, go through, review it, and we sign it on behalf of the IRA. And essentially, if you look down below, that'll be the titling on the accounts. So that's basically what they all follow. So directed trust company, FBO, Matthew Duffy Roth IRA, files purchasing it directly. That would be the name on all the titling. That'd be who who's purchasing that property directly. And again, that's kind of all the forms we have. These first ones actually are pretty much the ones that apply to real estate. So directly purchasing the property, going into private fund, that'd be that PPM private offering. Those promissory notes, that's kind of the industry term for hard money lending. But you can do that hard money lending either secured against the property, so that some collateral, or unsecured, where you're lending the money, no collateral to back it. But yeah, all the forms are there. And again, if you have any questions about that, you can reach out to our team. They'll direct you, to the correct place to get all that filled out, get your investment moving in a timely fashion. And yeah, when should I get started? So the amount of clients I have that come in say, I want to close on a real estate deal tomorrow, or I have a fund closing tomorrow, can I invest? Usually the answer is going to be no, unfortunately. But so yeah, if you're thinking about doing a self-directed IRA using those funds, always get started as soon as possible. Like I mentioned, that funding time frame does take a bit of time, 1 to 2 weeks. It's not instantaneous, unfortunately. But yeah, you'll check with your custodian, make sure you're meeting all the requirements. The transfer rollover, depending on where it's coming from, that could affect the time frame as well. But if you give yourself, usually a month or so in advance of when you're expecting to do a deal, usually you can get your account established and funded before then. So it's always better to get started sooner rather than later. Our accounts, they're based annually. So when you open up the account, you pay for the full year. It doesn't renew in, January or anything like that. But, always get started, as soon as possible, just so you're not left, holding a contract that you can't quite pay for yet because your IRA is not set up. And again, this is kind of a breakdown of our pricing. So we have a one-time new account establishment fee of $50. Our annual fee is $295. Some other custodians charge a variable rate, either based on the amount of assets in the account or the value of the account. Ours is a flat $295. If you have $10 or $10 million or one asset or 100 assets, still going to be the same price. And then all of our processing fees are $50 as well. And that's a one-time fee essentially at the time of purchase. So if you're purchasing a property into a private fund, you pay a one-time $50 fee. And that's essentially the only asset fee you'll pay inside the account. And yeah, again, so for this webinar, if you establish, by the end of day, Saturday, we're offering CC 150. So you pay your $50 account establishment fee, 145 first year's fees. And so again, not telling you guys to open it, but if you are planning on doing a self-directed investment, no matter who you go with, definitely get started sooner rather than later. That's probably, the biggest hiccup I get with a lot of clients is that they are on a time crunch. And unfortunately, IRAs are, still kind of old, kind of slow. So it does take a bit of time to get that up and running. And so, always get started sooner rather than later. Again, you can have the account open, not doing anything for a few months, find an investment later on, and that pays off instead of trying to get an account open for an investment that's going to close in 2 days. And so again, my contact information is below. If you want a copy of the slides, I'd be more than happy to, send that over to you guys if you want to shoot me an email. But yeah, you can get started on our website. If you're ready to go, you can go through there, or you can schedule a call with me or any of our associates. We'd be happy to, go through your situation, kind of rehash that process and let you know, how to get started, how to get your account moving so you can work on your investment.
Hey, Matt, so Clark, correct me if I'm wrong, but I remember like this fee, right, is actually being paid by the IRA account. So it's really not like coming out of pocket.
So you do have the option. So the IRS does allow for IRA fees to be paid out of pocket. So again, that kind of plays into the account type you're doing. So on traditional accounts, those are pre-tax, right? So you haven't paid taxes on it. Traditional accounts, I see people doing deduct from account where the IRA is paying for it a lot more. If you have a Roth IRA, you've already paid taxes on those funds. So typically those accounts, people pay out of pocket, but it is totally preference. You know, if you don't want to see that on your credit card statement each year, a lot of people just set that up through the account. Essentially, they're not seeing it come through. The only thing with paying from account is that there is a $500 minimum balance. So I thought I saw a question about a minimum to invest. Essentially, there's no minimum to get invested. But again, you know, based on the investment, you know, essentially you're looking at that fee each year. If you're doing deduct from account, you have to leave behind 500 plus those initial fees in order to keep the account open. So yeah, you do have that option though. And so, you know, it is just kind of on a case by case basis.
Okay, great. So we have time to do questions.
Wonderful. Yeah, I'm seeing that question from Edward. What is the minimum amount to invest here? Again, no minimum amount to invest. You know, I see accounts, you know, coming in with, you know, just a couple $1,000s. Biggest thing that's going to affect is what you can invest in. So if you're looking to buy a property outright, probably not going to have a capital to secure either a loan for that, something like that. So the smaller balance accounts definitely see, you know, more hard money lending or wholesaling real estate. Those are popular investment types if you don't have enough cash to purchase it outright, but you are still able to use your funds, you know, that way, do loans on rehabs, things like that. And then Sophia, can you open a solo 401k with directed, or do we have to go to a brokerage and then go to you to get self-directed? So we do offer, you know, the custodianship of those accounts, and we do establish the solo 401ks as well. We don't do that in-house. We use KQS lawyers to establish those plans. Essentially the fee to start a solo 401k, there's going to be an account fee for the accounts with us, but essentially the initial startup fee, there's a $495 fee if you're kind of getting a cookie cutter solo 401k plan. We call that docs only, but it gets you set up with a self-directed plan, and then directed IRA would be the custodian of that. Or they have a $995 full service option where you also get an hour with the attorneys. You can kind of customize that plan. Also discuss some, you know, investment strategies, you know, if what you want to do is, you know, good to go inside of that, and, you know, the best structures to set up within that if needed in order to, you know, achieve your investment. So I believe KQS as well, they're running a special through the end of November. I believe it's $100 off those fees if you do establish a solo 401k. So I know that that's a separate thing that they're doing as well. And then from R. Shane Livingston, can you move a portion of existing Roth or traditional? Yes. So traditional or existing IRAs, since those are individual accounts, they're not tied to employment or anything like that. Those can be moved at any time. And essentially, since it's a trustee to trustee transfer, there's no limits on the amount of times you can do that per year. There's also no limits on the value. So you can either do a partial rollover from an existing IRA that you have at Fidelity or TDA, or you can move over the whole account. No issue at all doing that. Again, no restrictions on that. Let's see, another follow-up. Can the self-directed IRA pay market rate expenses for being a general contractor on a new home? If it is your IRA purchasing it, those disqualified persons I mentioned earlier cannot put any sweat equity in the property. So even if you are paying market value, you still can't have a prohibited party working on that property. So it will be truly third party working on it. You won't have any involvement, you know, even if you are paying yourself a fair wage or not taking a wage, you would still need to go third party for that.
And I can actually take the next question here for you. How would you take a loan out of your TSP? I thought it had to be your primary residence. Please advise.
So how I understand the participant loans is that for certain accounts, like IRAs as well, you can take a portion out of that to help purchase your first property. For the participant loans, as I understand it for 401ks, you can take out that amount. I'm not sure if there's any, qualifications on that. I know that with the CARES Act, there was a lot of people, they kind of opened up those restrictions. But that would just, be dependent on what your plan states, what you can take out loans for. And the TSPs, they work a little bit differently than, traditional 401ks. So again, before you do, the loans out of those, definitely consult, the custodian, your CPA as well. There could be taxable implications, if you do that, if they, classify it as distribution, or if it is truly a participation loan.
I'm sorry, Jay, I don't know if is your question about TSP loan or it's about self-directed IRA? Because I think you're talking about TSP loan, and which is kind of like similar to Jesse's question next. If you are here, you wanna unmute yourself, Jay. Okay, I'll go ahead.
All right, so the next question here is, I have a TSP. I understand that typical TSP withdrawals are taxed at 20%. How would I do a transfer of TSP funds to a self-directed IRA? How much would I have to pay in taxes for the transfer? Is there a strategy for moving TSP funds to self-directed IRA to minimize having to pay taxes on it? Should I move it all or do partial transfers? I'm currently retired, age 62.
No, that's a great question. So essentially the difference between that, so your TSP withdrawal, in that situation, if it's coming back to you directly, that's going to be a distribution. So it's not moving to another custodian, it's coming from that plan to you. And typically that taxing, they put that tax on that because if it's traditional funds, a lot of custodians will do a automatic withholding on it. So that's usually where that 20% comes in, for that. When you're transferring it to a self-directed IRA, since you're retired, that's not going to be a distribution. It's going to be that direct rollover. So that isn't going to have any taxable consequences. Essentially, when you would approach TSP, I believe they have their own form for this, or they used to. I know they redid their systems, but essentially you'll let them know I'm doing a direct rollover to the corresponding IRA account. And they'll send that directly to us. And that's not going to have any withholding or taxes on it, as long as it's direct rollover. Now, if you accidentally take it to yourself and you meant to do one, you could see some withholding on it, which, unfortunately, if it's that portion's withheld, but you still want to put into account, once it's withheld, you can't really get it back. But if you get it done correctly the first time, you shouldn't see any of that withholding on it, as long as it's moving directly to another custodian. And I believe as well for the TSP, you'd have to double check with them. But a lot of those plans, if it's from a previous employer, or, like a severed TSP plan, they don't always allow partial transfers. Usually they'll make you do it all or nothing. But again, that would just be dependent on what they allow as the custodian of your funds. So you would check with them, but if they allow it, no issue at all doing those partial transfers. Direct rollovers are going to work like trustee to trustee ones, where there's not really a limit on it per year, how many you can do, or a dollar amount.
It looks like Jay responded and said he's still here and his question was about a TSP loan.
Okay, yeah. Unfortunately, I wouldn't know about those. Like I said, those work a little bit differently than 401ks. So yeah, they might only allow that loan. Again, it's pretty much up to the custodian what's allowed for, what's in those plan documents, essentially what you can do with the account.
Definitely. And okay, I saw Jay come across here, just making sure he wasn't saying anything. All right, and Edward Johnson actually was clarifying. He said to clarify, what's the minimum investment for an LP capital? That's 50,000. All right, doesn't look like we have any further questions. Are there any other questions?
Right.
Stephanie, I have a quick question.
Ryan has a question.
Sure.
I'm sorry, I'm completely new to the group. My apologies. I'm interested. Here's your chance to do a little pitch on what type of real estate assets you're offering for LP syndication opportunity.
Absolutely. We offer multifamily syndication opportunities. We invest in the Southeast in Texas. And we can actually have like an intro called get to know each other a little bit more and kind of talk about some of our previous deals and what we have in the pipeline.
Cool. Sounds good. Thank you, Tiffany.
Absolutely. And I see that Caroline actually says, can we have a website or phone number again? And what I'm going to do is I'm going to share out Matt just, Lupe just shared Matt's information. I'm actually going to share out my screen so that you also have all of our contact information here at Crown Capital in the event that you'd like to reach out to us after this evening. So you have our personal contact information, website. You can also follow us on LinkedIn, Facebook, or IG. And thank you so much for joining, everyone. We'll actually be sending out the recording tomorrow, so definitely check it out. If you have any questions, feel free to reach out to us. We appreciate you taking the time out this evening.
Thank you for coming.
Thanks.
Yeah, thank you guys.